Alright everyone, hope you're having a nice day. This is the B-shaped profile video. In this video I'll be covering the B-shaped profile, how I trade that said B-shaped profile, how a B-shaped profile is formed, as well as my risk and any other trade related factors on the B-shaped profile. And by now you have probably seen the previous videos, for example the P-shaped or double distribution profile video. In these videos, I start by giving the definition of what the profile is, how I play these type of profiles. So on a stereotypical B-shaped profile, where my levels would come from and what my trade is. After I have done that, I tend to cover the risk and when I know I'm wrong on the trade. And then after I have done this, I tend to cover 2 or 3 examples of that profile or that trade setup in action. Before we start this video, I just want to give you a disclaimer. This again is not financial advice. It should not be taken as financial advice, and this is rather educational. This is for educational and entertainment purposes only. I also want you guys to excuse any hoarseness or croakiness in my voice you may experience. This is a result of Globus, as my doctor puts it. So I'm just going to start in this video. A B-shaped profile, or what is a B-shaped profile? You can see a B-shaped profile on the right of your screen. It is a normal B-shaped profile. It is very similar to the P-shaped profile, and it is quite self-explanatory on why they are called a B-shaped profile. You can see the obvious B shape. They are the opposite of a P-shaped profile. For example, if you turn this around, it would look like a P and a P-shaped profile. The trading setup on these B-shaped profiles is relatively similar to that of the P-shaped profile in the terms that we want to short the upper end of the distribution, so short around 3670, or we want to short at the lower end of the smaller distributions such as here and up here. There is also the trade I outlined on the P-shaped profile where I would want to get short once we got below the main distribution. In this case, we want to get long once we break above and hold above, say, this 3670 level. How are B-shaped profiles formed? In a B-shaped profile, there is usually a long liquidation involved as buyers run into initiative sellers and they are forced to liquidate long positions. These profiles often form when the drops occur quite rapidly and we consolidate in a certain area for quite a bit, or if we consolidate and then rally, the rally tends to occur at the end of the day as we do not get as much volume traded, and thus we are left with a B-shaped profile. As I've said multiple times before, I do use mainly, or most of my trading and most of my levels come from daily profiles rather than session profiles. So all photos you will see are not session profiles, they are daily profiles. As I discussed in the setups or the introduction video, these are trading view profiles for ease of accessibility for most traders. You could probably go and use Sierra or Jigsaw if you want to. So I'm going to talk about how I play these profiles. This is the same profile that we saw on the previous slide. In this profile, these plays that I would take are relatively simple. And keep in mind, so say this is Wednesday's profile, these will be the trades for Thursday's profile rather than Wednesday itself. So these profiles are quite simple. So the first trade for me, say we open at 3640, would be to short into 366.50. This trade is not that favorable in my opinion. We much rather long once we get above 366.5 and hold there, with take profits being 3685 and potentially the smaller distribution at 3720. I did mention in the P-shaped profile that I would much rather short once we get below and hold. In this case, as this is the opposite, in this case I want to get long once we hold above. targets for these long trades are quite self-explanatory. We have the bottom of this distribution. This distribution is quite wide, and the secondary take profit would be up here at 3720. I wouldn't really want to get short on the initial touch of the solid red line. I'm talking about this line, and much rather long once we get above and hold. So this is the second example of how I play these type of profiles. Another way to play these types of profiles is to short the bottom of any smaller distributions. In this case, it would be shorting 3685.25, which is the red dashed line on the image on the right. Unlike the P-shaped profile, however, I don't mind taking this trade, and the RR is not as bad as compared to the same trade on the P-shaped profile. There is an issue with this example in particular, and that issue is that the distribution is spread over quite a few number of ticks, and there is no low volume area separating the two distributions. So I would really not prefer this trade, but in the later examples you will see quite good examples of this. As I said in the P-shaped profile video, I believe, I like to see low volume area gaps between the distributions, and I want these gaps to fill out and then we short once the gap has been filled out. In this case, the low volume area gap is not really present, so I would really not like to short. On the other hand, up here we can see between 3710 and 3720, so the level would be here. There is a slight low volume area, so it would be nice to short 3720 once we get there. That would be the better trade rather than 3685. And obviously the best trade would be to, say for example, we open down here, we trade up into 3680s, test back 366, and we would go on to get long for targets of 3685 and 3720, where we would try and reverse our position. So now I'm going to talk about the risk and when I know I'm wrong. So in regards to the risk, you've probably heard me say this quite a few times. But my risk on most S&P 500 trades ranges from 3 to 5 points depending on volatility on the given day, as well as if the trade occurs during regular trading hours or extended trading hours. The trades that I do take in this video, or the examples rather that I've shown you, the favored trade example that in this video, the one where I am talking about, let me just show you guys an example. I'm talking about when I would want to get long above 3666. That example, or that specific trade setup, has a decent expectancy on the trade. Once we get above and hold above the main distribution, and I would get long with a risk of around 3 points in extended trading hours and 3 to 5 points in regular trading hours. I don't mind playing these on the first touch, but I much rather rebid the level or get long once we dip below and reclaim the level. When I say the get below and reclaim the level, I'm talking about, say we're at 3666, we have a slight break above, so the first try would be to long here, as I said. But I would much rather prefer we get below, get above again, reclaim, that's what I'm talking about, reclaim, we're above the level, we retest it and we hold, and that would be another trigger to get long on in this particular trade setup. The other setups, such as shorting the bottom of the smaller distribution, I would attempt once or twice based on the context of the day, whereas shorting the top of the bigger distribution, I would only attempt once. When I'm talking about context of the day, I'm talking about factors such as how big this distribution is. Is there a low volume area separating the distribution from the other high volume distribution or the high volume node? So in this case, if I am shorting 3685, I would probably only short that once. Why? Because the low volume area between these distributions isn't that big, and because that gap isn't so big, I would only prefer to short this 3685.25 level once, whereas the short at the top at 3720 I will be able to try twice, Why? Because the low volume area is more distinguished and I would want to short the top of that low volume area. So, and the long, once we, the shorting the top of the bigger distribution. So say we open here, shorting this I would only try once because the market tends to fill out this low volume area very quickly and I don't want to be short for when that happens. So I'll only try that the first try. This trade has a relatively low expectancy, so we usually only get 6 to 8 points. So it's not something I really like. Now that I have discussed my risk on the setup and as well as how many tries I would attempt on a setup, I want to now go through a few examples. So this is an example on the June the 2nd, 3rd and 4th. This is in the FDAX market or the German market. In the next slide you'll be able to see this and how I trade the setups I've discussed previously. Just some context for that day. We had a late trend day. So a late trend day, I mean the trend occurred in the later half of the day on the 2nd of June. This led to a B-shaped daily profile presenting itself as the rally occurred in the later half of the day. Just like the previous examples that I have shown on these slides in the first and second slides, we had a major lower distribution with a much smaller upper distribution. We ended up having a smaller bounce from the bottom of the lower distribution, but the main bounce came from the top of the upper distribution. My preferred way to play this profile worked quite well in the example we're about to see. We bounced off the smaller distribution, then also proceeded to have the largest bounce off the main distribution. This may sound a bit complicated, but you will see what I'm talking about in the following slide. So we can see we have this main distribution, and this is the B-shaped profile. We do have a smaller distribution here, but we can clearly see that this is the main B-shaped profile, or the main part of the profile. So first we would identify our levels. Given what I've said previously, our one level would be at the top of the low volume area and at the bottom of the smaller distribution. So this would be at 14,506. Now you may ask yourself, why wouldn't we have the level over here at say 1475? Well, the reason again is that there is not a low volume area or a distinct low volume area separating them. On the other hand, over here we have quite a distinct low volume area separating the two distributions. Some of you may also wonder why I have placed my level at 14,460 instead of say down here at 14,440. In this case, both these levels would have worked out equally as good as one another, but I like my level to be placed at the top of the actual distribution, in this case at 14,460. These can be sort of counted as two separate distributions for some people, but for me they are part of this larger single distribution, and as a result the level always goes at the top of the distribution, so the level would be placed at 14,460. This distribution can't be discounted. It could be considered by some to be part of this larger distribution, but for me it doesn't really count because it has its own sort of structure as compared to this one down here. This is a clear distribution. It is separated by a low volume area. So we can see we would have a level here. Our first trade obviously would be to try and long, but considering the fact that we opened quite high, this could be attempted as a long, but I would not personally attempt this. Obviously we want to get long. The first trade would be to get long once we retest the sort of base of the B. So this worked out. We traded into the base of the B and we get a nice 30 point bounce or 25 point bounce. We retest and then we get another say 45 50 point bounce. Then when this does happen, we do get our second trade kick in, which is shorting the bottom of this upper distribution. This worked out here as well. I wouldn't consider this to be a trade. Why? Because I'm using this as an objective way of shorting rather than it being up to the trader's opinion and using it as a so-called pivot. So we don't count this. I wouldn't count this anyway. So my first trade would have been to long. It would have worked out quite nicely. The this secondary long would have worked out quite nicely as well. You could have maybe even tried it a third time. It would have worked out quite nicely then. The short, this would have been our short. It worked quite nicely, as we know our take profit. Our take profit is going to be the top of this distribution, and we can maybe even hold short if we get below the major distribution. This didn't end up happening. The short served quite nicely, but then we end up bouncing quite a bit. I want to say 160 points off the top of the lower distribution. So now that I have covered that trade example, I want to wrap up this trade example. So the example in the previous slide, we can see that we did indeed have a much smaller bounce from the bottom of the smaller distribution. This level also then served as a resistance for the market as we trade into the main distribution. So I'm talking about here, it serves as a resistance level as we keep trading. It's sort of a ping pong action. We keep trading into from this back down to this distribution. The main distribution, however, presents the most opportunities as we see a multitude of bounces from the area, culminating in a magnificent rally into close and into the following session. I'm talking about here how this level was actually never breached, and we did have a brief breach, but we didn't manage to trade below the high volume node. Then we get quite a strong rally into close, into the following close. As I explained earlier, there are quite a few ways to play these profiles, but my preferred way is to long once we're above the main lower distribution. I also wouldn't mind shorting, say if we opened, since we opened quite strongly, a short wasn't really on the cards. However, suppose we opened down here in the 14,380 range, a short would certainly be on the cards. Say we trade up, I would look to short 14,460. You'll see something like this in the next example, I believe. The next example is an example of a short trade based on the first setup that I outlined. So now that I've covered this, I want to go into another example. So here we are. This is the second example. This example takes place on the 27th of December and is in the Nasdaq, just for the people who may want to replay the order flow that takes place. In the next slide, you will see an example of the trade setup with a B-shaped profile. We had another trend day on the 27th of December, which led to a B-shaped daily profile presenting itself as we had consolidated at lower prices for an extended period of time after trending down. Just like the previous examples on these slides, we had a major lower distribution with much smaller upper distributions, and you will see shortly that we had a sharp rejection from the top of the lower main distribution. This example was quite a bit trickier. This is largely because there was no opportunity at all to get long once we broke above and held above the lower main distribution, and the only opportunity that presented itself was to short the top of the main distribution. This is the setup that I discussed. Let's go back. This is this setup where I said I would short 366. So basically on this day we had a profile like this, and the only trade that ended up happening was a short into 366 because we could not overcome that level. So let's go on to that example. Here is a chart of the Nasdaq. This is the 27th, I believe. This is the 28th. So on the 27th of September, you can see December, sorry. You can see that we have quite a sharp downtrend day with a few relief rallies. This relief rally created the second level that I have outlined, 11,045, and then we have the main level at 10,992s. You can see we had quite a few rejections at the level the previous day, so on the 27th. So we can see that our first go-to setup for this type of day is to short the top of this distribution. Why would I short this as my first setup, you may ask? Well, it is largely because we opened low. We did not open strong as in the previous example. So in this previous example, we had quite a strong close, as you can see, and we opened nearly 150 points above the lower distribution. In this case, we were quite a bit below. I believe we closed at the lows or around the lows, and as a result of us closing around the lows, there was no opportunity to long first. So our first trade in our trade setup would have been too short. So we trade into 10,992 the following day, and we can see the sharp rejection that we get. Now you may be asking, why did I choose this level? Well, you can clearly see that it lies at the top of the distribution, and furthermore we end up having quite a few rejections at this level the previous day during the regular trading hours. That shows that the level has some sort of significance. So we do end up trading into that level at 10,992, and we drop something like 200 points. Now obviously we wouldn't hold this trade for the whole 200 points. Let's just walk through some take profits for this trade. So we have 10,992, which is our entry. The first take profit in my opinion would be this level, so something like 10,950 or 10,940. That's about 40 or 50 points. The next take profit would be once we dip below and hold below the bottom of the distribution. So I'm talking here, this level, it's very close to this level, so 10,900-ish, and there are no real other take profits for this trade, so you would just scale out, say, after 50 more points based on your own risk to reward. The only take profits are the ones that are outlined, which would be around this level and at the bottom of the node or the high volume node. We can see that we do not trade into this level. Why did I choose this level then? The dashed red line at 11.05. Well, because it lies at the top of the low volume node. We can see why this low volume node is made. We get quite a sharp red candle or quite aggressive selling that is relentless. So the level or this dashed line lies above the low volume node and just below the high volume node at 11.045. We do trade into this level, but this is not on the same day. This is, I want to say, 2 days later. We have a different profile type here, so we wouldn't really take this trade 3 or 2 days after the presentation of the profile. So now that I have explained this example, I am going to wrap up the example in the next slide. So in the slide preceding this, we can see that there is a rejection or a reaction that presents from the top of the lower distribution. This was the trade example I discussed in, I believe, the first slide. In this case, we did not get an opportunity to get long once we broke and held above, and we had to resort to shorting at both the locations that I had mentioned before. We only got to one of those locations. We didn't trade into the second location. As I explained before, there are quite a few ways to play this profile, but I believe I have covered the most effective and highest risk to reward opportunities within this video. So we have the short at the top of the high volume node. We also then have a long at the top of the high volume node, and then we have a short at the top of the low volume area or the bottom of the high volume area. These are the three main setups that you need. I have discussed the risk that I would take on these trades in the previous in this video, so you can probably go back and see where I discussed that. Now that we have discussed the examples, the trade setups, as well as wrapping up the examples and the trade setups, I want to end this video. So let's just summarize. It is possible to scalp up the top edge of the distribution for some points on the long side. The same can also be said for the upper and much smaller distributions that are present on the profile. These tend to serve as pivots in some cases. The preferred trade for the upper distributions is to short. However, if we do open considerably higher than them, you can long that level as well. That being said, the better play in my opinion is to long the top of the main distribution once we get above and hold there, with respective take profits at the upper distributions. The only other trade that I haven't mentioned here is the short at the top of the bottom distribution, the one that was present in the example that I just covered. That is also a pretty good trade. I've discussed the risk on these trades, how many times I take these trades, and you can see that in this video. With that being said, I think I've covered most topics, or nearly all the topics relating to the B-shaped profile. So thank you guys for listening. Hope you have a great day, Please do enjoy the other videos in this course, and I do apologize for my voice or any inefficiencies in my voice. And yeah, thank you. Have a great day. Fader out.